Welcome back to the best pro for you trading floor. Today we are going to talk about the Nasdaq, which is catching a serious beat on the back of massive fundamental headlines ahead of tomorrow's critical FOMC decision, which makes us think, is this going to be sustained ahead of such a critical Fed rate decision? First, the geopolitical risk premium is starting to crack. This is what is probably supporting the Nasdaq or risk sentiment. The market is pricing in a short-lived conflict as Iran reportedly gave safe passage assurances to Indian tankers in the Strait of Hormuz, as well as France and Italy have also opened talks with Iranian leadership. That potential de-escalation is acting as a relief valve for tech. But the real rocket fuel came from Nvidia's GDC conference yesterday. CEO Jensen Huang announced that the that started yesterday. CEO Jensen Huang announced that their AI chip revenue opportunity has doubled and projected at least $1 trillion by 2027 in revenues as the industry shifts from AI training to massive scale inference. When Nvidia drops a $0 forecast, the Nasdaq pays attention. However, as I said before, tomorrow is FOMC rate decision. While a hold is 100% priced in, the real risk is the dot plot. The market has already pushed rate cut expectations all the way back to September due to the recent energy-driven inflation shock. So let's jump into the charts and see how the technicals are setting up ahead of the Fed. Now, we started with the 1 hour chart, of course, to show you the breakout, but the real deal is back on the daily. If we look at the daily chart, price is currently struggling to push through the median Bollinger Band. We've actually retested that level at 24,866. And also failed to extend as far as the 25K, which is just shy of that technical support. Here there is a bullish argument. This is the second day we've bounced ahead of closing, of course, down at 24,300, because you've got the first session and then the second session. And the thing is that we've closed after having a bearish leg for 3 days, okay, close it outside of the Bollinger Band. So this is an immediate rejection of that breakout and a reversal for now. This rejection of the lows just shy of the 25K handle is also natural, especially ahead of the FOMC meeting. That's to the top side, right? So the RSI is also currently just below the 50 line, creating a confluence. RSI below 50 and price below the 25K. If we do see breakout to the upside, the ultimate target is the upper Bollinger Band, which is sitting at 25,300. But then, of course, before we get there, we have a major roadblock, I would say, at around 25,100 and the 25K as well. If we look closer at the recent price action, and let's go down to the 4 hour for that, we have had a false break below the 24K, okay? A false break below the 24K and a potential double bottom. Why? That's why. So this could be considered a double bottom. And notably, we've also got several attempts to the upside that failed. So again, also make 2 points to the top side. Instead of having points, actually, let's do something much better and much more clear. On the 4 hour, let's just place a line at the bottom and a line at the top connecting the most important levels. So you've got, on the one hand, you've got the 2440 on the top side. I would even go as low as that. You've got 25,200. These all price rejections are considered false breaks. Okay, so we can clearly see the Bollinger Bands here are also flattening out. Okay, see the top and see the bottom. This looks a bit more healthy ahead of the FOMC, since we are always expected to see sideways corrections ahead of FOMC. We are currently above the median line, however, okay. But the attempt to push towards the upper band at 24,960, was quickly rejected. There is a strong chance we see price take a step back down to the 24,000 570, I would say, which is the candle, the bullish candle ahead of the announcement, I would say. And typically prices would go all the way back there if they were to return back to the low. Otherwise, if we maintain that support, then we could shoot higher. But let's not forget that this entire structure since the February 5th bottom has been corrective. Okay, all of this has been corrective. We are trading a highly active zone defined by these two key levels, to the downside and to the upside. So a test of the top could see a full reversal to the top, to the bottom, if we get all the way up there after the FOMC, and vice versa. If we go all the way down here after the FOMC or ahead of the FOMC, we could see a full reversal all the way to the top side. So now, how do you trade this on best portfolio challenge? It all comes down to tomorrow's FOMC dot plot. Okay, so the bullish scenario is this. If the dot plot still shows one rate cut for the year, which is what it showed last time around, the market will likely rip higher, targeting a breakout above 25.20 and towards 25.46. Okay, so let's also place another target for that particular scenario. The bearish case, however, if the Fed gets hawkish on war inflation and the dot plot shows zero rate cuts, it will be viewed as heavily hawkish, and it would push the Nasdaq down to test 24.38 and then 23.97. If that holds, it's a different question. But of course, we're not here to gamble your funded account on predicting Powell's dot plot. Wait for the release, let the initial algorithmic spike happen, and trade the structural break once the trend is confirmed. This is best prop for you. Trade smart, manage your risk, and I'll see you in the next breakdown.